Happy Thursday and welcome to another Lunch and Learn with Purse Strings. Today we are talking about making home ownership a reality and to talk about tips to really affording your dream home. So we're so excited to have Lindy on for this conversation today. For those who are new here, Purse Strings is all about providing tips, tricks, pieces of advice on how to be financially fearless. And then when you're ready to buy a home, plan for retirement, maybe sell a home, plan for kids' college, whatever it may be, we have top tier financial professionals willing, ready, and able to serve you. We call those our Purse Strings approved professionals, and Lindy is one of them. So we're so excited to have her expertise today talking about home ownership. But before we dive into that, Lindy, could you give us a little intro of who you are and what you do?
Thank you, Maggie, and thank you for having me on. I love being part of the Purse Strings Network. I love everything you're doing for all of the people. My history is I have been in the insurance and financial services industry since 2002, but I don't want you to shy away from me because I started with the word insurance. It just gave me a lot of background. I used to have insurance licenses. I used to have licenses to trade securities, and I have let those all go now. I am a fee-only planner, and I have taken this 20 years of experience to see what I feel is right in the industry. So I work with people on planning. Only they can manage money with me, but they don't have to. So I have a really different model in that I focus on the story, their goals, where they are right now, kind of like a personal trainer. Where are you? What hurts? Where do you want to be? And setting those baby steps, regardless of how much money people have right now. So thank you for inviting me. And I'm so excited. It's one of the number one questions I get is, how can I buy a house or how can I buy a rental property? So I'm excited to be here today. I deal with this a lot.
Awesome. Well, we're excited to dive into it. And I want to clarify for, anyone who doesn't quite understand why you gave up these insurance licenses. So that way you can't really sell a product, right? And so I know a lot of people feel hesitancy like, oh, I'm going to get pushed a product. They're going to sell me a product. And you don't have anything to sell except like your time and your expertise.
Exactly. So I advise on it. I have a lot of experience and I help people connect with others if it's right for them. But I am never that pushy. Some people might think that they go to somebody and their only tool is a hammer and everybody feels like a nail. And I don't want you to feel that way.
You got the whole toolbox.
Yes, exactly.
Well, yeah, I'm excited to dive into home ownership. If anyone watching this has questions while we're live, throw them in the chat. We're happy to get to those. If anyone's watching the replay, throw them in the comments. We'll work on coming back to those. And yeah, Lindy, before we even jumped on, I know I was saying that I would love to buy a home sometime soon. I'm waiting for that down payment. So yeah, this is just, I'm sure, another conversation you have all the time. And so just to get started, you're a financial advisor. You're not a mortgage broker. You're not a realtor, but you're talking to us about home ownership. And so why is it important that, you play a role in home ownership and, someone might talk to you first before even going to these, people who actually are helping you buy the home?
Right. Why am I talking about this exactly? Well, one thing that is really important, and you just brought this up, is you're talking about a down payment. Mm-hmm. So that's one thing that's super important. But also, I can help you make those connections if I have them or reach out to my network so that you find a trustworthy mortgage broker and that everybody knows a great realtor, I'm guessing. And how much should you save for a down payment? Once you find that place that you want, how much is it going to feel okay? So the reason that I come across this conversation all the time is because people are wondering, when is it time to have these? What can I do to increase my credit score? Mm-hmm. And I once had a conversation with a woman. She called me the day after she closed on her house and she said, I just bought a house and I don't know if I can afford to stay here. I really don't want to have those conversations with people. I want you to go in with excitement and know that you can afford to invite your friends over and have a meal with them in the backyard and eat food and pay the mortgage at the same time. So
Those
that's
are
why
huge aspects.
right? So that's why it's important to work with an advisor to make sure that you can still save for the future. And it's what is that, like comedy?
Yes, and
Yes,
yeah.
yes, I want the house, and I want my friends, and I want my social life, and I want to travel, and I want to save for the future. So how can I do that? So
Yeah, and it's a big purchase, if you have the down payment, but that took your last penny, then maybe, the house is too big for you. So we'll dive into all this stuff, but it's really understanding that holistic plan. And so one thing you mentioned were those credit scores. I know that's a huge thing when applying for a mortgage. So what are some things people can do to kind of increase their credit score before diving into a home purchase?
thank you for asking. That's really
Yeah.
important. One thing people can do, and I'll address this a little bit beforehand, is I really want people to protect their identity.
Mm,
And I know that we are far too young to be thinking about Social Security, but one thing I want you to do is log into the Social Security Administration and create your own login and password so that somebody doesn't do that for you. And that'll help you. Another thing is check your credit bureaus. There are 3 of them. There's Experian, TransUnion, and Equifax. Each credit reporting bureau will give you a free annual credit score, and you can log in. I'd say put a reminder on your calendar to check one of them in May, one in August, one in January, and look to make sure that everything that's on that report is actually yours and it's right. And they're not saying that you have some late payment history that's false. And the other thing you can do on those reporting bureaus for free, there's an option that isn't free, but you don't have to do that for free. You can go in and I think it's called freeze. It's either freeze or lock. One of them is free. Lock your credit. And if you do need your credit for something, you can go and say, well, which report bureau are you going to check when I buy this new car? You're going to use Equifax. Okay, let me unlock that. And you can unlock it for a day or a week. So making sure that your credit report is right.
yeah.
You will have a better access to loan interest rates, which will save you thousands of dollars over any loan, whether it's a credit card, a car, or a home mortgage, if you have a higher credit score. So if you can get 850 is perfect, but you have to be almost older to get that, because one of the things that they look at in a credit score is the length of your longest standing account, whether that's a credit card. And so one thing to keep in mind is to always keep your oldest credit card in force.
Yeah.
And but try not to have too many outstanding credit cards, because they also will look at your ability to take on debt versus your ability to earn income. And that's called a debt to income ratio. And if you have multiple cards with balances on them, working with an advisor too can really help you decide which balances to pay off, or we can do a heart check on what feels right for you and what makes you feel motivated. So another tip would be to set up automatic bill payments so that, let's say I have Netflix. If I automatically put that on a card and I set the bill to pay every month on that card, that's a way that shows a really good payment history for me. And personally, I paid off my car loan a year early. It sounds like a great thing to do, right?
Yeah.
But my credit score dropped like 15 points, not a lot, but having multiple types of credit is actually good for your credit score. So I wouldn't rush to pay off loans early unless you are worried about that debt to income ratio. Another thing I would warn against is if you go to some store and they're like, oh, do you want to save 15% today and open a card? Just say no. That's a ding. It's a hard credit pull, and that will not look good. And again, you're building up your ability to have more credit. So there are some really straightforward ways to increase your score while protecting your identity at the same time.
That identity protection is becoming more and more important recently, just through all of like the online systems. I've also personally known many friends whose family has kind of gone into their credit, and that's a big red flag. And so they're working with that, but it's better to know that before you start house searching and then you realize and have to fight that problem then.
Yeah. I would say if you think you're in the market, well, honestly, you should be on the top of this all of the time, but start preparing as much as 2 years in advance, really, just because it can be a little cumbersome to go back and forth. I did have an error on my credit report. They had my old insurance business phone number listed as my personal phone number, and I just emailed them and they changed it right away. So I was very impressed with the service. They took care of it.
Yeah. And so you really want to work on raising that credit score so you can get a lower interest rate, making, saving a lot of money in the long run. So working on different ways to either close cards, reallocate, different things to make sure that score is going up and you are protected and safe throughout as well. And so when is it, too soon to talk to a mortgage broker when you're thinking about buying a home?
I, again, have connected people who are talking about buying as early as 2 years in advance. Wow. It sounds really early, right? But you do want to have a relationship with a lender who you can go to and who has a really good pulse on what's going on in the market. As inventory is changing or the Fed is raising rates, they might say, you don't have to feel this rush right now that you're feeling. And they can help say when they think a timing might be right or when there might be less competition from other buyers. Mm-hmm. That's not my area of expertise. I won't talk about that specifically, but I have a lender that I talk to who just blows my mind with all of his great information. And I have had I've sat in meetings with the lender with a client, and what it's nice to know is that they're thinking about how right sizing the house purchase. And this lender in particular, which I'm sure all of them do, but they know so much about down payment assistance programs. And you mentioned you're saving for a down payment. Well, as a first-time home buyer, you might be able to put down a lot less than you thought. And some of the down payment assistance programs even don't have to be repaid. They end up being a gift if you stay in the house a certain amount of time. And so to interview a couple of lenders and feel out how you work personality-wise, if you feel like they're a good teacher for you, if that's what you're wanting. And I always love working with a broker. Mm-hmm. So somebody who has access to multiple companies, whether it's a lending product or an insurance product. I want you to get not just the best that person has, but the best that's available out there totally. Yeah. So I'd say 2 years is not too soon, as long as you're upfront with them and say, here's what I'm thinking. Is it okay if I start this relationship now? And then if your time frame moves up, you can you know what you need to have in place, and you can grab that for them, and you've done the legwork already of building that relationship.
Yeah, it's really smart. And I feel, I don't know if this is just me or other women out there feel the same way, but sometimes it's like, oh, I know it's going to be 2 years. I don't want to waste your time, waste your energy, because I know I'm not a purchaser yet. But the key word is yet.
Right.
If my
You are.
intention and being upfront and transparent, being like, hey, I'm still working on this, but this is my goal. I want you on my team, or I'm trying to build my team, and being proactive, just being transparent, I
Mm-hmm.
think is so essential. But that's their job, and they're excited to have you as a client in 2 years or
Yeah.
whatever that may be.
The other thing I was going to say is you're so right. I'm not a buyer yet. And they can give you that information of what you need to know so that you're working towards it, and maybe even more in-depth industry tips.
Right.
And I mentioned the down payment assistance programs. As a planner, as a financial planner, I've always sort of been like, you need 20% down.
Mhm.
Well, with the rising prices of houses lately, it's almost just seems so daunting to have that much of a down payment. Let's
Yeah.
say the average price of a house is $500,000 in your community, which might be ridiculously low depending on which coast, if you're on the coast, right? So what, you're supposed to have $100,000 just for the down payment. And then, so to have an idea of, and part of the reason why I always said 20% was I was really against the idea of paying mortgage insurance. And
Yeah.
what mortgage insurance is, for you that don't know, is the bank who's giving you the money is making you, the homeowner, buy an insurance policy that you are paying for in case you default on your loan.
Mhm.
So now with some types of loans, if you once you own 20% of the house, then that mortgage insurance will fall off. But with
Right.
other types, it does not. And so you would have to refinance, get your house appraised, hope that the home value hasn't increased so much that you maybe don't actually own 20% of your home still yet. And so you pay for appraisal, pay for new closing costs, and you don't know what interest rates will be in the future. So it
Yeah.
always felt kind of risky to me to buy without having the 20% down. But what I'm hearing now is that the cost of mortgage insurance isn't that expensive. And
Right.
so it's something that, with the rising costs of homes, it's not as bad as it used to be, at least in my
Yeah.
version anyway. So,
Well, I mean, if I know some houses you can put 3.5%, and in that time it would take me to go from 3.5% to 20%. That house could have doubled in price with these years that we've been having. And so
exactly.
that time waiting can be detrimental. And that's why it's great just to open the conversation, see what that situation is for you on where you're living. Because like you said, if you're on the coast, it's way different than if I'm in Kansas City, Missouri, where it's, not running as crazy as it is in other places.
Right. Yeah.
So yeah, 2 years, talk to a mortgage broker. Let's get the conversation started. And so then, the mortgage broker, will run your numbers and say, hey, you can have this much money. How do you decide if that is actually like a good number though for you to work with?
Good. That's a great question. And I'm not saying anything derogatory about mortgage brokers. However, I feel like I have heard of situations where they'll say, you can afford this house. And you're like, oh, it's gorgeous. Yes, I want that. Right. But then what about the friends and the barbecue and the saving for the future too? And
Furnishing that
that,
home.
furnishing it, an emergency fund. What about that feeling of house poorness? And I have a house, but I can't do anything else. I can't buy a pot of flowers to put on the front
Yeah.
step, right? So I have a cash flow worksheet that I use with my clients, but anybody could figure this out. is 25% of what you are bringing home. Hopefully, and it is a little optimistic because I know house prices have increased, but it's not too much of a pipe dream. I'd say 25% for the mortgage, the interest, the taxes, the insurance. If you have an umbrella policy, which I would recommend that you get, those fixed monthly expenses that you're going to pay no matter what,
Yeah.
try to make your payments so that it doesn't exceed a quarter of what you're bringing home. And then you'll have utilities on top of that. So that would include an association due in that 25% as well if you
Okay.
are in some type of condo or association. Utilities are not included in that. But what that does is it gives you 75% of your take home, where hopefully you are still able to have lifestyle and have savings. And it's the most successful people have the lowest monthly expenses, where their fixed expenses are less than 50%, less than half of what they're bringing home. And then they have so much agility. If something happens, they have all these decision making opportunities, like, yes, I can travel, or yes, I can send my kids to school, or
Right.
whatever is the priority for them. If you can keep the housing under 25% and fixed monthly expenses under 50, your whole world will be so much more successful, and you'll have a lot more of choices.
Those are some good, really like guidelines to kind of go by, no matter on what your income is, just to kind of start laying out like, is this what I'm supposed to be doing, and so that kind of
Mhm.
helps bucket it. But yeah, I mean, sometimes the mortgage people will give you a lot more money than, which is looks enticing. But you do
Yeah,
have to pay all of that back eventually. So you really have to talk about that either with your professional and your partner, or whoever you buy in the home with, to figure out
yeah.
that best fit.
From a heart standpoint, I would say that a home should be a place where you feel that you can relax.
Mm-hmm.
And if that mortgage payment, when you walk in that door, isn't making you feel at home or
Yeah.
relaxed, it's not going to be good for your mental health or your physical health. So as as much as it feels important to keep up with the Kardashians, or the Joneses have changed,
Yeah.
I
Right.
want to encourage people to focus on what's really important to them, what is really important to them. And that can be said by where you spend your time and your money. And Maggie and I were just talking a little bit before this lives, and she asked if we currently had any other properties. And my partner really wants a cabin. I live in Minnesota, and I'm not interested in maintaining two properties. I said, if we want to be on water, which I 100% absolutely do, then let's just live there and only
Yeah.
have one lawn to run around with a lawnmower.
It,
So,
it's a lot more than just the house. You come into the lawn and then the upkeep and the cleaning and the furniture, and it really
mhm.
becomes more than just the four walls, which is exciting yet a lot of money.
Yeah. Yeah, totally.
And so, what are your thoughts then on purchasing a property for rental income? I know this is something that I was kind of thinking about doing, and would
Yeah.
love to hear kind of your thoughts on this and how you work with people in that situation.
Yeah. This is a hot topic right now,
Yeah,
Maggie.
everyone's talking about it.
Yeah. And it's just interesting that you want to do it too. So it's important that, in addition to the down payment, that you think about having a good idea of what the rents are
Mhm.
in that area, what you can get for it. Obviously, you're going to do your homework. Make sure that it's a neighborhood that you would feel comfortable living in,
Right.
right? And do your due diligence with renter checks, whether it's a long-term rental or Airbnb. Make sure that you have some way of verifying who's renting. If it is a long-term renter, I would make sure to do a background, a credit check for sure. They're not expensive, totally worth it. Get a solid lease, right? And get first month's rent, last month's rent, and a deposit, just so that you know that they have the resources in order to be able to pay you. And so that's like the what to do, but for how to do it and feel safe, I would say have at least 6 months of operating expenses in an emergency fund, as well as plus deductibles. Yes, and emergency fund and deductibles for that property. We're in kind of a weird time where we just had an unprecedented event where due to COVID, many people didn't have to pay rent for a long time, nor were we able to ask them to leave if they were not paying rent. So I would want you to not lose your property because if you were completely dependent on that rental income. So I would want to have at least that 6 month and make sure that your lifestyle allows that you could still pay the mortgage on it, even if it weren't rented. But hopefully it's at an income level where it is actually making you money every month. So run what all those expenses are, make sure you charge a rent that is appropriate. And hopefully if it's a multiple living unit where you happen to be in one of them, hopefully it is just paying your mortgage for you, and you have great neighbors who are quiet and clean and take care of the yard like it's their own place, right? I was lucky with that in the past. It's one thing I would encourage you to think about too is how involved do you want to be as being the property owner? I've had a couple of rental properties. One place was great because it was a condo in the Virgin Islands, and the management company there would rent it for me when I wasn't there. So, and they had a cleaning staff, and basically I would just say when I wanted to be there. Amazing, right? I also had a house in South Minneapolis that I didn't have a management company for, and the toilet broke on my birthday. And believe it or not, I'm not a plumber in addition to CFP. So I paid way too much money, spent too much time trying to get a plumber out to replace the stool on my birthday. And you know what? That was not how I imagined spending that birthday.
No.
So, and you can really literally get a call at any time of the day. The other experience I had was I live pretty near that house, and every month I would want to go by and check on it. And the renter would say, "Oh, no, everything's fine." And then when I went to sell the house, I was like, I need to do a walkthrough.
Right.
And there was a hole in the corner of the foundation that water could have just poured into the basement. And she never alerted me. So it is important that you do set a schedule and put it in the lease of how often you want to do that. The other problem was she didn't want to move when I wanted to sell. And so she wouldn't prepare the house, or her son would be sleeping in the middle of the day. And so it can make sure that you have these things in place.
Yeah.
I don't know how to do that necessarily, but so that you can, if you do no longer want to be an owner, make an arrangement with the seller or the renter of how you can coordinate. So, I mean, she was a lovely renter. I offered it to her first, the buyer, but she didn't feel like she had the wherewithal to do that because I wasn't her planner, obviously.
Exactly. That was the problem.
That was it.
As being a renter, it was always nice to be able to be like, "Oh, landlord, I have this problem. This is your problem now, not mine." But then when you're on the flip coin, those are all your problems, and you have to figure out how you're going to deal with it. And I know many people who get, more and more properties have more of a manager for some of them. If I had one where you lived in it, maybe you would manage it. But yeah, you're right. They could still call on your birthday, or any other day of the week,
Right.
which can really put a damper on things, and just not how you plan. But it is
Yeah, I
part of
mean,
being, a business owner.
yeah. Luckily, I was in town, right? So I
Yeah.
could be there for it. So,
Oh man, bet you won't forget that one.
nope.
And so to finish off here, what else should people plan for, besides the house? Once they're in their new home, what else should they kind of plan for financially?
It's a good idea to have at least 3 to 6 months of your new living expenses with the mortgage and interest and property taxes and insurance and all that saved up in a cash reserve. I would recommend, if you have the cash available, to choose a deductible that will give you the lowest premiums. It's been a long time since I was in the insurance industry. They used to offer a 1% of the value of your home deductible that lowered the cost of the insurance premium a lot more than, say, $1,000 deductible. And the other thing to think about is, would I actually file a claim for that, right? Because if you have an $1,100 claim and you file that, then your premiums are going to go up. So, yeah. So
Oh,
thinking about that, make sure you have your house emergency fund in addition to your own emergency fund, and that things like that will help prevent you from defaulting on the mortgage, which we never want to say as we're like dreaming about our own place. Consider having that separate fund. I would say for the house emergency fund, the first year, of course, is going to be more expensive because you're going to want to put in a new shower curtain or a bath mat or new furniture, whatever, right?
yeah.
But after that, if you consider about, let's say it is a $500,000 home that we talked about half of 1%. So 5,000 would be, so if you had about $2,500 a year that you put into that, and
Mhm.
you're not going to use it every year, but then the year is going to come when you have to replace the roof or the furnace, and hopefully they're not the same year, right? But
Right.
to just keep saving and knowing it's not a surprise, but it's happening, you just don't know when. So to
Yeah.
plan for those unknowable time frames with the knowable event. I would also, as a pro tip for where to start house hunting, is my mortgage friend, I always was the go-to to Zillow, but he said he prefers Redfin. He said it
Mhm.
has better filters, and to not look at what's really listed, but to look at what's sold, to have a true understanding of what the prices are in
Yeah.
your area. And then strategies for winning the bid are, so you find the place that you want. It's a kind of a competitive market. How do I win the bid? I know some people are writing letters,
Mhm.
but another thing that you can do to make yourself even ahead of the curve on that is, and you have to have somebody that you know, but there are some inspectors who you can call and say, I want to look at a house today. And if they can go with you on the initial walkthrough and just do a quick flashlight inspection, then you can make an offer that is not contingent on inspection, and you don't have to call and bring them through again. And that can really help you to win an offer on a home.
That's a
And
that's a great tip. My roommates just did an they're like, it's too risky to do no walkthrough, so they set up to like 8 grand. But the other people who won the home bought it, did no inspection whatsoever. But kind
yeah,
of bringing somebody on your walkthrough can kind of save you a lot of money, because they're like, as a first home, we can't just risk no inspection. That's a
right.
little too much for
You
us.
don't know what you're looking for at all.
Right.
Where somebody who has an experienced eye can tell if it has good bones for sure.
Yeah.
Yeah. In another call, I might want to go into a little bit about how does somebody who is self-employed or retired validate their income
Right.
to show that they can afford a house. So that might be a fun future topic to
Definitely. And that's the thing, we share with people is, we think buying a house might be cookie cutter, but if you're having child support, or if you're retired, or if you're on, your own, entrepreneur and making your own
Mhm.
income, there are hard ways to prove your mortgage or your income. And
Yeah,
then, you have to have it for a certain amount of time. You have to prove it in certain ways. And so there are
right,
so many moving parts, even though we're all, first time homeowners or whatever it may be.
right. Can I go like just take a 2 minutes or whatever
Yeah.
to talk about that? So
Yeah.
if you are retired, for example, part of your social security does count and go towards your income, and they actually do it as a percentage of like 1.25.
Okay.
So it shows as more
Mhm.
income than what you have. And then any investments that you have, they will include that as investment income. So
Okay.
even if you do not have a wage paying occupation, you can still, as a retired person, qualify to buy a home. Now, the self employed person, okay, so I know like we love our tax write offs and want to keep our income as low as possible. I'm afraid there's really no way around that. If you want to show that you have the income to afford to buy a house, you're going to have to raise your income for at least 18 months to
Wow.
validate. So, again, that's why that 2 year frame of working with a mortgage lender is they can tell you what you might want to show as not written off or take home pay so that you can get into the house in the area that you're looking into for your future place. So those are just some quick things to
Yeah.
go there on, well, how do I buy it if I'm not showing income? Well,
And that's the thing. Then after that, you probably want to talk to your accountant and your tax professional and all the people in the business to make sure you
work
can get that money to buy your home.
work with
Um,
someone.
as everyone can see, there's a ton of moving parts, and so that's why you do need all of these different professionals to be on your team and to really assist you through this process, because it's usually one of the biggest purchases we make in our life. Definitely one of the most exciting, but we want to make sure we do it right with really good professionals on our team to help kind of lead the way. So thank you, Lindy, for coming on and sharing your expertise and why it's so important to really work with you as well as a mortgage and a mortgage professional and a realtor. What's the best way for people to reach out to you?
My website is Create FP, like Create Financial Planning. There's a link to schedule with me right there. I always am available for a introductory complimentary consultation where we can just get to know each other. You can share with me what's on your mind, what are your goals, what's keeping you up at night, and see if it makes sense for us to work together. I am also happy to share my cash flow worksheet with people if they email me at Lindy at CreateFP, which I see is on the banner below. So those are the two best ways. If you are interested in talking with me, I would go through the website. Otherwise, I can shoot you a return email, and there's a link to my calendar on my return email as well. I love working with purse strings. So, Maggie, thank you so much for letting me
Yeah,
be a part of your special team. I appreciate it. So,
of
thank
course.
you.
Of course. So yeah, if anyone has more questions or want to work with Lindy, Lindy at createfp.com is where you can email her. She's one of our purse strings approved professionals, so you can check her out on our site, pursestrings.co. And good luck to all my new homeowners and second homeowners out there. It's very exciting. So good luck on the journey. We're here and happy to help you. And until then, be financially fearless.
Thank you, Maggie.
Bye.
Bye.